Hello, this is Matt on the Moon Lambeau channel. It's a day of celebration. Today is the first day of recession, with the only thing missing being an official declaration, but it's reasonable to suspect that soon enough we'll have that as well. So the technical definition of a recession is two back-to-back quarters with negative GDP in terms of growth. And today is July 1st, so we got two quarters back to back. It looks like that is indeed the case. Again, waiting for an official, an official declaration. But I think we're actually in a literal recession right this very second. Now, you may notice that the sky isn't literally falling. There's all sorts of people that try to make it out like it's a doomsday scenario. And yeah, sometimes you have things like, the Great Depression. There has been the Great Recession. In 2008 financial collapse, housing, and all that. Bad, horrific things can happen, but generally speaking, recessions, they last for, somewhere in the neighborhood of a year or so. I can't remember the exact number. And it doesn't mean that everything goes to hell in a handbasket for everyone, but typically unemployment rates do creep up, and it's very miserable for those people that are hit by that. But for most people, it doesn't necessarily mean that the sky is going to be falling, although things do tend to get worse for everybody. In fact, you've seen, of course, inflation completely out of control. Surprise, surprise. I've been bitching about that for years as the United States has, of course, debased the dollar. Like, who would have thought that would happen? You had a bunch more supply. Oh, I mean, what is it? I think something like I can't remember if it's like 40 or 50% of all United States dollars ever printed have been printed in the last 2 years. That's absurd. And you didn't think inflation was going to come? So what does this mean for crypto? What's it mean for XRP holders? Well, as far as I'm concerned, as an XRP holder, with it being XRP being my largest holding, the cryptocurrency that I'm most impressed by, it's my favorite crypto. As far as I'm concerned, it's just stay the course. That's it. And I will tell you this too. There are signs of a bottom. So unless we have some sort of wild card type of situation, we're there. I mean, like we're very close to the bottom. So, in fact, here I'll just show you the headline now. I'm going to try and get to the story before the video's out. From You Today, The Big Short. Michael Burry believes we're halfway through bear market. So Michael Burry, of course, he's the guy who about 15 years ago famously shorted the housing market. Everybody thought he was bananas. Shorting the housing market, that's never gone down. But it did. We had a housing collapse in 2008, and he was right, and he made a boatload of money. He thinks that we're about halfway through the bear market, so I'm going to share with you his thoughts as well. And so my personal opinion is, in a general sense, this stuff moves together. I think there's no shortage of data in terms of whether you're talking about stocks and crypto. There's only so far down it's going to go. That's my opinion. And I'm going to ride this train with you, for as long as you guys are willing to continue hanging out with me. And I do appreciate all the support, of course. I'm going to be here because I just think that there's nothing but tremendous opportunity. I do not think there's a reason to be fearful here. As long as you have income and you can put food on the table, you have a revenue stream, you're fine. If your net worth goes down, as is mine and just about everybody else's on the planet, that's what happens during times like this. So what? All you have to do is just be aware that every so often there are recessions, stocks go down, also crypto will go down, and that happens, and it's part of life, and you should expect it. And when it happens, it doesn't. If you have the data, you're like, it's going to happen at some point in the future. If you've got income coming in and you can pay your bills and you can put food on the table, what the hell does it matter? It's just short-term volatility that isn't fun, I guess, but so what? We are sitting on like a potential gold mine here with XRP. So far as I'm concerned, I think it's going to be worth an absolute fortune in the future. I think Bitcoin's going to lead the market out of this at some point. Altcoins are going to rally too, and it's going to be a good time. And look, to be clear, I don't have a financial background of any kind, so just understand I'm not offering financial advice. Don't buy or sell anything because of anything I say or write. But let's just go ahead and jump into this since today is probably the first day of the recession. Fine, we're waiting for an official declaration as numbers are being tallied, but I think we're pretty well there. So this comes from Fortune. This piece is titled, "The Economy Probably Just Plunged into a Recession, According to a Real-Time Data Tracker Used by a Key Federal Reserve Bank." Yeah, but I'll tell you this, and I'm going to share with you the specifics, but we're at a point now, things have gone along far enough, where it's not just whales that are accumulating crypto, specifically Bitcoin. Even small holders of Bitcoin are accumulating. I'm going to share with you that right after this. So it's not all doom and gloom. That's why I'm telling you, markets always find a bottom, right? Unless you think the market's literally going to cease to exist, which is bananas as far as I'm concerned. Markets find a bottom. It doesn't matter. You're fine. So anyway, piece reads as follows. There's been no shortage of recession predictions so far this year, with everyone from JP Morgan Chase CEO Jamie Dimon to billionaire investor Carl Icahn warning of the potential for an imminent economic downturn. But some experts have gone even further, claiming the United States is already in the midst of a recession. The only thing missing is the official declaration. And mind you, this piece is from today. In May, Elon Musk said the United States was probably in a recession that could last up to 18 months and argued it'll be tough going for many. Then, just this Tuesday, ARK Invest's Cathie Wood said she agrees with the Tesla CEO and world's richest man, pointing to rising inventories at retailers as a sign of growing economic weakness. So let me just pause and note. I actually did talk about that the other day. Rising inventories at the likes of Target, Walmart, and that's an indicator. Well, why do they have so much stock? Shouldn't people be purchasing this? What does that mean? Yeah, and so that okay, fine, fair enough point. It really is. But that doesn't mean that suddenly the Fed is going to flip to quantitative easing and reduce, interest rates all of a sudden. Inflation's still out of control, and even if it's the case that in retail you're seeing cracks, in the pavement, even if that's the case, understand that there are a whole lot of other categories you need to look at, including transportation. Right? How about oil? How about gasoline specifically? How about that rising? It's just, my gosh, I don't think. Also, although these can be signs, of course, of recession, certainly. So I'm agreeing with that. What I'm saying is, in terms of the Fed flipping around, doing a 180 from what they're doing in terms of increasing interest rates as time passes, which slows economic activity, obviously. I don't think they're going to flip on that anytime soon, is the point that I'm making. Anyway, piece continues. Musk and Wood's arguments are based on the widely accepted technical definition of a recession, which involves a period of 2 consecutive quarters of gross domestic product contraction. And on Friday, they got some supporting evidence from nothing less than one of America's central banks, or at least its website. So that's why the reason that I started out the video saying what I was saying is because of this. And if this is indeed correct, we're in a recession. The Federal Reserve Bank of Atlanta's GDP Now tracker now predicts that second quarter GDP will contract by 1%. That's quite the dip from the tracker's early June prediction for an increase of 1.3% in the second quarter. So just pause to think about this. They were thinking that there would be growth this quarter of 1.3%, and the GDP actually contracted by 1% over that same time period instead. Not exactly ideal. If the Atlanta Fed's pessimistic outlook is correct, coupled with the 1.6% decline in GDP seen in the first quarter, it would mean 2 consecutive quarters of a shrinking economy and therefore a recession. Now, let me tell you, as somebody who was an adult even back in the 2008 housing collapse, especially in the 2008 through 2010 time period, people felt like it was the end of the world, we'd never recover, and what happened for the following decade? Growth like you hadn't seen in it was off the charts growth in terms of stock, and obviously the advent of crypto as an asset class. That was also completely insane. But again, it feels painful. It feels like the end of the world, especially with all the scary stories. And what I'm saying is the scary stories are almost always completely wrong in terms of what it means for the long term. Okay? It doesn't mean that they're wrong in terms of the short term and will there be a recession? Will people suffer in some capacity? Yes. And I am not happy about that. Well, who would be thrilled about somebody suffering? I'm just saying in a general sense. I just don't want you to think I'm making light of it. I do understand it's very serious for those people. I'm just saying it's like when you're talking about these types of contractions, like you're talking about, again, over a span of a quarter, 1%. It's not volatility that you'd expect from crypto markets where it's like a 20% drop over that time period. It's a 1% drop, and it's still very bad, and it still causes real harm. And the Fed did this, right? The governments did this. The government did this in the United States. I understand all of that. They created the mess, and now we're having to live through it. It's always the government that causes the mess, isn't it? Just about, right? But what I'm saying is, if you're out there, as long as you can put food on the table, you have an income, you will be fine. Don't worry about the net worth going down. It's silly to be freaking out about these things. It's a known quantity of just being an adult living life. Of course, sometimes you could have a year or two in a row even where your net worth goes down. So what? That means that prices for assets are probably pretty cheap and there's an opportunity. And again, as long as you've got income coming in, you're still gainfully employed, might it be reasonable to purchase some stuff? Well, that's a decision you make for yourself, but low prices entice me. Now, here's a tweet from Eric Voorhees, and he is the founder of cryptocurrency exchange Shapeshift, and he wrote the following just this morning. Prior crashes, excuse me, folks, sorry. Prior crashes were all bubble blow-offs, unrelated to the larger world. This is the first crypto crash, which is clearly exogenous, a result of macro factors outside of crypto. Maybe this is why, of all the crashes, this one has been least worrisome to me. Now, I like that tweet. I even retweeted that one. It's in line with what I've been saying for, I don't know, I've been saying it a fair bit, frankly, over the last couple of weeks or so, probably. And he just tweeted this today, but he's right. The macro factors, that's what's been causing the tremendous drop. So fine, maybe there's going to be a crypto bear market anyway. What about all the other outside factors, the macro factors? Well, clearly that's hit the crypto asset class even harder, because we saw that you know when we had that huge dip recently with equities and crypto just moved down at the exact same moment. Well, that was because of macro factors. The stocks went down because of macro factors. And so there is this wild card. It's like, okay, but are the macro factors done messing stuff up, or are we still going to see more drops? And I don't have the answer to that. I'm just preparing you so that you're aware of the situation, because if it happens, I still don't think it's worth freaking out about it. And then in a separate tweet, Eric Voorhees wrote, and it is part of like a 2-tweet thread, he said, 3 Arrows Capital, Celsius, and Terra have been symptoms, consequences of this exogenous shock. And so note that 3 Arrows Capital, I was talking about them just in my very last YouTube video, they've filed for bankruptcy. They were once worth $10 billion. They made a bunch of risky, stupid investments, and then the market crapped out, and then they couldn't pay out the loans. So a lot of people lost a lot of money. Then there's Celsius. They did something similar from what I can tell. They're acting basically as a bank. Just you could hand over your keys to your crypto and give it to Celsius, and then you earn interest, earn your 7%. But of course, then they've got the keys to your crypto. And once the liquidity dried up, and they reached a point where, well, we don't have enough liquidity to actually let people cash out the crypto that we're allegedly holding for them. So like on paper, you've got the crypto on their exchange still, but in reality, they loaned that out to others who can't pay them back, and so it's no longer yours. And then, of course, there's Terra. We know what happened with Terra, the Terra Luna situation with the UST stablecoin that crumbled down. I mean, who would have thought backing what's supposed to be a stablecoin by a highly volatile crypto asset in a highly speculative asset class? Who would have thought that would be a bad idea, right? And then Eric wraps up the tweet by stating, it is natural and appropriate for the riskiest, most speculative, and most vulnerable to be cleared out in this process. Everyone is hurting, but life, beauty, virtue, all built upon pain and struggle. And so I think he's right on these points that he's making. Unfortunately, you do have to have these instances where there's a cleansing of the system. And I understand how horrible it is for the people that are wrapped up in that, because there's collateral damage there, as in people being collateral damage effectively. I understand how painful and awful that is for them. But when there's a bunch of people making risky bets like this with the backdrop of a scary macro events occurring, like, what do you think's going to happen? This does need to happen, and it does need to go away. It doesn't mean I want it to, but it has to, because there's no other choice. Then there is this from chart analyst Will Clemente. So how about a little positive news here? And you should be paying attention to this. It's always worth paying attention to the behaviors of people in the space, because what have we seen? We've seen massive capitulation already. And in a world where we're not worried about macro economic events, I'd be even more confident that the bottom's in or so super close. And I still think that could be true. It's just a question of, okay, is something on a global scale going to happen unrelated to crypto that will result in crypto just dropping even further? Because maybe. But look at the behavior of crypto participants. It's to the positive. This is the coolest thing. From Will Clemente. Bottoming / accumulation signals everywhere. Major funds / lenders going bust. Worst quarter ever. No coiner haters dunking on us, whole timeline saying this time is different. If we are finding an accumulation zone, we'll likely still see months of boring and capitulation through time. So I'll just pause and note, that may be what we're in store for. A lot of sideways trading. There may be some additional capitulation in the coming months. But I'll tell you what, I was here last summer as well as everybody was saying, oh, it's the end of the world, doomsday. I was still here straight chilling, putting out Moon Lambo hot jams. It wasn't the end of the world then. It's not the end of the world now, even though it is worse now, admittedly. It's not the end of the world. Things are going to be okay. You listening to this, you are going to be okay. Like, you don't need to have fear. I understand. If you are in the position where the income stream is cut off and you can't pay for things you need to live, got it. Okay, solution needs to be found. And still, even then, if you're one of those people, nothing but sympathy for you. I can only imagine the amount of stress that you're under. But there are solutions. There is a path forward. And then Will Clemente also said, to be clear, there's absolutely nothing wrong with waiting until things settle out. Historically, Bitcoin has given ample time to buy cyclical bottoms. Just saying, for long-term participants, hard to not scoop up some corn at these levels. I put my money where my mouth is. Yeah, makes sense to me. That's a perfectly rational approach. Just for those people that want to increase exposure to, crypto, world of crypto, yeah. I think that history will show that this is a great time to do so. That's my anticipation. Now, it might not feel like that for a long time for a lot of people because it could take months for things to actually bottom out or stop trading sideways. So it may not feel like that to people, but it is what it is. Now take a look at this, though. This is from Glassnode. They do a bunch of awesome on-chain analytics work. I'm a big fan. Check out what they were like. This is another sign of positivity so far as I'm concerned. And there's no one metric to look at when you're considering, okay, where are we at? How do we get a handle on this? Which direction are things going to go over the market? There's not one thing you can look at, but that's why I highlight multiple metrics over the course of many videos as I put out these Moon Lambo hot jams. Now take a look at this. This is good stuff. Because what have we been seeing? We've been seeing a lot of retail capitulation, right? Well, not as much currently, at least. According to Glassnode, the state is the following. Within the extremely challenging Bitcoin market conditions of 2022, there are 3 entity cohorts with very interesting dynamics. Shrimp, which are investors that hold less than 1 Bitcoin, are stacking. Whales, which hold at least 1,000 Bitcoin, are stacking. So they're all purchasing. Everybody's purchasing. That's the point that's being made. And they even note that miners are distributing. Small Bitcoin holders with less than 1 Bitcoin have been adding to their balance at the most aggressive rate since March 2020. So let's pause. Well, why is March 2020 important? Well, because that's when we experienced the pandemic-induced market collapse, and that felt like the end of the world too for people. Don't forget that one. There's always an end of the world event. This is another one of them. Oh, it's always the end of the world, right? And then people respond emotionally. They make important financial decisions with their emotions. It's terrible, terrible decision. But March 2020, that's XRP got down to 11 cents. Okay. So I don't know how low it's going to get here. I don't know if we've seen the bottom already at 28, 29 cents, or if it's going to go lower because macro events push the price even further. But big picture, I don't care. Like, I legitimately don't care. I don't think that's an indication of long-term viability at all. Push XRP down enough. Like, I stopped buying XRP almost 2 years ago because I own too much of it. And even I will buy more if you sufficiently entice me. There is a price where even I'll be like, okay, it's my largest holding. Even I will put more money into it, even though I'm focusing on diversification within this asset class. Anyway, Glassnode continues. Shrimps are adding at 36.75 thousand Bitcoin per month, which is 0.2% of the circulating supply, and 1.3x monthly issuance. Shrimps now hold 1.12 million Bitcoin in total. Now, whales, which again hold at least 1,000 Bitcoin, typically go through accumulation/distribution cycles, often aligned with Bitcoin market structure. Now, these entities are also adding to their balance aggressively, acquiring 140,000 Bitcoin a month directly from exchanges. And whales now hold 8.69 million Bitcoin, which is 45.6% of the supply. So whales hold a massive percentage of Bitcoin. Although I tell you, if that sounds alarming to anyone, like that's too high, I respectfully disagree, comparatively at least. It sounds like a lot, I'll give you that. But look at the world of like legacy finance. It's even worse. Like if you look at total wealth distribution, it's a smaller percentage of humans at the top own even more. I don't have the data off the top of my head, but I was looking at it recently. Yeah, you could say that there's that big concentration. That's true of pretty much anything in life, though. So that's actually, honestly, to be fair, it's nowhere near as bad as if you just look at total wealth owned by what percentage of humans. I'm sorry, I don't recall off the top of my head, but I know it to be true. So it's like, is what it is, right? That's life. The richest people, they're in positions where, it's a little bit easier to further accumulate wealth. It is what it is. It's fine. Not the end of the world here. But that's cool stuff. So anyway, you see that they're accumulating. So look at the behavior, though. So it's a sign of maybe we're at the bottom, and if not, okay, well. But even if not, so what? Then there's this from you today. The Big Short, Michael Burry, believes we're halfway through bear market. The founder of Scion Asset Management and the hero of the Big Short movie told subscribers to his official Twitter account that the market could enter the second part of the bear market and plunge once again following earnings compressions. And here's the tweet he put out. Adjusted for inflation, 2022 first half S&P 500 down 25 to 26%, and NASDAQ down 34 to 35%. Bitcoin down 64 to 65%. That was multiple compression. Next up, earnings compression, so maybe halfway there. Yeah, and so indicating that he thinks that things are going to get worse for businesses, especially, well, there are a number of reasons for that, including the fact that, interest is more expensive. So don't be surprised to see that. So that's why he's saying, okay, we're just progressing like you'd expect the ones to progress. And so, like, the people that are planning for the future right now, whether you're purchasing stocks or crypto, whatever it may be, those are the people that are just going to make an absolute fortune. They're going to make a boatload of money doing what most people don't have the coconuts necessary to do. You know what I'm saying? They don't have the cojones. But this is where money's made. It's when things are down. It's so obvious. But yeah, wouldn't mind it if we actually are halfway through the bear market here. But and again, recessions don't last forever. And there's always concerns like, even in 2008, people were saying that it was going to go on forever. It's like it's going to take 5 or 10 years of recession. And it was, I can't remember exactly how long it lasts, but wasn't it somewhere around like between 1 and 2 years? I'd have to look that up admittedly, but it wasn't a 5 or 10 year thing. And you're hearing that crap again now. And so fine, maybe they happen to be right. But I think a lot of it's just doomsday stuff, designed to get clicks and stuff. Like that's pretty much it. I'm not a financial advisor. You should not buy or sell anything because of anything that I say or write. That would be a very, very, very bad idea. Until next time, to the moon, Lambo.